to The Broker with Rich Lane. Hey, we're out here with KP for his market update, special edition for The Broker. Hey, I guess I didn't do everything bad last week. They let me back. Here we are Wednesday again. KP, I tagged the restaurant. They gave us a booth this week, so I don't have to sit on your lap. Listen, before we go into your market update, I want to talk a little day trading. It's very hot right now. Where do you fall? You a Warren Buffett guy? You a Jim Cramer guy? You Dave Portnoy? Where do you fall?
Well, we talked last week that Joe Kennedy, the father of John F. Kennedy, when he said when the shoeshine boy was giving him stock tips, he knew it was time to get out of the market. And so everyone's talking about the market, and they're talking about the stock market, and they're talking about trading. And for those of you who saw my update last night, we say it's not a stock market, a monolithic stock market. It's a market of stocks. And there are some people that day trade and some people that are in the middle, and there are some people who are long-term investors. So David Portnoy is the founder of Barstool Sports. He's from Boston. I think he sold it for like $100 million. So he's tested out 400 pizzas online. If you follow him on social media, he's out there. I think he's in Delray Beach right now. For those of you listening in South Florida, he's going from place to place. And he's renamed himself Davey Day Trader while he's got all of his people working from home. So he's working from home. His team's working from home. They're putting out content for Barstool Sports, but he's day trading, which is interesting because it's like, can just anybody with money just go out and day trade? And, you see what's happening in the stock market, and people at home who are trying to buy houses, they see that. And they're like, what's going on with this market? Is it oversold? The fact that it's raising up so much in the face of people dying of COVID-19, it makes you think it's fake. When you juxtapose like your life versus the stock market. But, it's a market of stocks. There are companies that are doing well. There are people that are making money. I'm not a trader, so I'm not Davey Day Trader. I like Jim Cramer. For those of you that watch CNBC, been watching him with my father for many years. It's really nice. My dad is he faces Parkinson's disease, so it's very hard for him to get around and have conversations with anymore. But I have many fond memories after college, 99, 2000, watching Jim Cramer talk about the market and just talk about business in general. And I think it's really helped, me and my colleagues just to talk about things that Jim Cramer's talked about. So I'm a huge fan of him. And he's we have Evan Wade here in the background and Martin Warren here. Epic Lending, Nations Lending, Nations Direct, excuse me. I got that on my brain. But we have some people from Philly like Evan. And, Jim Cramer's from Philly, and he's very sharp. Yeah, he's very sharp. Huge Eagles fan. I'm a Cowboys fan, and I feel bad for him, but he gives advice every night. He puts out content every night. He's on there every night. He isn't out there just to hear himself talk. He's not a narcissist. I'm not here to hear myself talk. All this is fun to have a microphone and have a good time. I'm here to try and provide value, and so if I hear things, I'd love to tell it, and you can talk to your borrowers or your consumers or your teammates. Jim Cramer, he puts it out there every night. Warren Buffett, we all know Warren Buffett. And he's a long-term buy and hold investor. I think he's got $130 billion in cash sitting on the sideline. $130 billion cash after getting rid of his stocks at a loss in the airlines. And so it's kind of funny if you look out there, you see, did Warren Buffett, the Oracle of Omaha, which I've been a fan of his for many years, did he lose his edge? Did he lose his edge? Is Davey the day trader who's making all this money because he's got $100 million and he's buying things on Robinhood like fractional? He probably doesn't have to do a fractional share. But, look. So let me just make one final point here. I know you asked the question. So you got Buffett, you got Cramer, you got Portnoy. Growth stocks have run away. People are overvaluing growth because we know who's going to grow. Facebook, Apple, Netflix, Nvidia, Google, they're all going to grow. We know that. Tesla. What about the dividend stocks? What about the S&P, the other 500 people? What about the Dow, the other, the Russell 2000? These other companies, are they going to make it? People aren't working. And then what about the dividend stocks? Clorox, Coca-Cola, all these things that do well. Are they going to do well? They're catching up. So people look at that, and then they look at you, and they say, should I wait to get a house? Is now the right time? Are we going to see a crash again? How is it possible with people dying, 115,000 people dying in America alone? I mean, how can I buy a house? So it's a very good question. It's a topic. It's related to housing. It's related to mortgage. It's very interesting. It's a very interesting topic. So we're watching it. We talk about it because our borrowers talk about it.
KP, thank you for that incredibly useless information on the stock market. Okay, let's get back to it. What the heck's going on in the mortgage market? Come on, that's why everyone's here. We don't want to hear about the stock market. We can turn on Jim Cramer and look at his hairy forearms anytime. What's going on in the mortgages?
Hey, you asked the question. All right, so mortgage industry. The Fed came out and they said this week they're going to start buying individual corporate bonds, and that's huge because they're buying corporate debt, which backstops companies that create jobs, which helps us get out of the recession, which helps housing, which housing is doing great. 11-year high, number came out today, 11-year high for applications. 11-year high for applications. So what's going to happen to prices? Prices are, we're undersupplied coming into this. You got a ton of people out there. You got cheap money. We all know it. People are waiting to buy homes. They're refinancing their homes. They're getting cash so they can go buy a second home or an investment property. It's coming. So where are the builders? Housing starts kind of uptick a little bit, not where it needs to be. We're still very undersupplied in many markets, and that's going to be a problem, especially if the Fed keeps money cheap. So let's talk about something new called yield curve control. It's something that's been floated around. My good friend Josh Pitts wrote about it in Rise and Shred about a month ago. And yield curve control is basically the Fed saying to the world, hey, you know what? You can get a 10-year treasury for 70 basis points. If we're going to stop buying bonds, we're going to stop buying treasury bonds, and we're going to guarantee you 70 basis points return on your money. So if the market doesn't buy up, they'll supplement and buy enough to get that price where it needs to be. If it buys too much, they'll sell off. They will control the yield curve. So if you know that the Treasury 10-year is going to yield 70 basis points, and you can go make 400 basis points more in the stock market, you're going to see more money go into the stock market. You can't buy corporate debt because the Fed's buying that too. The Fed is pulling out all the stops, and that is huge for our business as it relates to reflating everyone's 401ks, reflating confidence, reflating businesses flush with cash, reflating equity firms so people can feel confident and have some certainty. There's certainty and uncertainty is a big deal in our market. So housing is going to be very, very favored with more measures being handled by the Fed. And the Fed says they don't want to do more money, more stimulus than what they've already said, $6 trillion that's out there. They're now kicking the new money to Congress. All right, Congress, we've done our job. We're doing $6 trillion. The Fed during the Great Recession did only $3 trillion up through 7 years? I think it took them to do $3 trillion, something like that. So it's now up to Congress. It's now up to our senators and our representatives to basically say the next policy coming out is a policy of the people. So y'all got to get together because the Fed's done here, and they've done a lot. And look, it's less bad news. It's incrementally better news. Not even talking about the health front, but the Fed is here. Don't fight the Fed.
Hey, listen, before I conclude tonight, I just got to tell you one thing in all seriousness. You look marvelous. Look at that shirt. Oh, my God. Anyhow, hey, listen, another update with KP. Tons of good info, and always good to be with you. Appreciate your presence. I'm Rich Lane, the broker. I'm out.
Cheers.